Welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. As much as I like looking at options and specific stocks, I also like looking at ETFs and talking about them. Some people like investing in SPY and the triple Qs, but in this video I want to talk about one specific growth ETF that I think could be a good substitute for either one, or even a good addition to the SPY or the NASDAQ or whatever other ETF someone wants to hold. It's a good long-term growth core ETF that you could build around or again use as an addition to someone's portfolio. So if you're new to the channel, welcome aboard. Hit that subscribe button. Here at Unlimited Options Investing, we talk everything from options, stocks, crypto, ETFs, and we're investing for the long term. As well as always, smash that like button and let's get started. Alright, the ETF we're going to be talking about is the Vanguard Growth ETF, ticker symbol VUG, and right off the bat, one of the most important things if you're an ETF investor is you're looking at the management expense ratio, where here it's 0.04%, which is pretty much $4 every $10,000 invested, which is astronomically low, especially if you're comparing to mutual funds, for example, where those banks are charging you upwards of 2% on a lot of their funds, which is robbery pretty much. And there are other ETFs that they charge more, but this one is one of the cheapest that you'll see, especially for what it provides. It's, again, one of the top core ETFs, in my opinion, overall. So this is one extremely important box that's checked off right off the bat. So it seeks to track the performance of the CRSP US Large Cap Growth Index. It provides a convenient way to match the performance of many of the US's largest growth stocks. Taking a look at the holdings, you have 10% Apple, 10% Microsoft, 6.5% Amazon, 4% Facebook, 3.5%, let's say 8 or so percent Google, 2.5% Tesla, and so on. So it's between the NASDAQ and the S&P 500, where it holds 285 companies. But unlike the NASDAQ, it's not restricted to only non-financial companies. And I pretty much look at it as they took the companies out of the S&P 500 that had very strong tailwinds over the next decades, with very strong secular growth. So think semiconductors, technology, consumer discretionary, and so on, and packed it into this ETF. And if you don't want to diversify internationally, so you could put 100% of your portfolio in this, or 75, 50%, or it could just be a good addition to the rest of your portfolio. It's actually one of the largest 25 ETFs in the US, and actually what's cool, I found this pretty cool, is the 25 largest ETFs have about $2.9 trillion in assets and represent less than 1% of the total 2,600 total US listed ETFs. But about 44% of the nearly $6.6 trillion in ETFs, which is crazy, which is about nearly half pretty much. But just to show that it's a popular heavy-duty ETF. Performance-wise, it's done very well year to date, up nearly 22%. Looking at the last 5 years, up 170%. And all time since inception, back in 2004, up 513% all time. So the main risk when it comes to this ETF is short-term volatility. It's a pure play on growth of the largest companies in the United States. And looking at forward PE ratio for large cap companies, mid cap, and small cap, right now these really large companies are trading at historically high valuations, unlike these smaller companies that are trading at much more reasonable valuations. So you do have to be prepared mentally and financially that if there is some kind of correction or pullback in the short term, if you can handle the idea of having less money than you put in initially, and even your willingness to keep adding as things are low instead of when they're going up and higher and everything's dandy. And taking a look at the candlestick charts, so every candlestick here represents one day. So we looked at the all-time graph. Pretty much if you had bought VUG at any point, you would have done well for yourself. So long term, does it really matter if you were to get into this ETF at $300 or $280 or God forbid we go back to just May pricing at $260? At the end of the day, if you're willing to hold for the long term, it doesn't really matter. Of course, you want the lowest price possible for the most amount of gain, but timing the market truly is impossible. But again, looking at the candlestick, so I had drawn these channels from last September from 2020, and it's been trading in this range up until this past July. Although we did have a little bit of a flash correction this past week, it looks to be recovering for the moment. However, I really wouldn't be surprised if we fall back under the $300 mark, and getting back near either one of these trend lines again. But for all we know, it could just keep recovering and blast off to new all-time highs. So you really can't go wrong when it comes to this ETF for the long term. However, timing is important when it comes to the market. Unfortunately, it is impossible to do so. But let's say, for example, Tesla stock. It reached an all-time high back in February, and you could have two different people. One person that bought Tesla 10 years ago that's been holding it until today, and one person that bought Tesla at the all-time high and is down on it. One person loves Tesla and the other person hates it. It's the same company, same fundamentals, but two different people getting in at different times. So although VUG is an excellent ETF, you do have to be careful though that timing is everything when it comes to a lot of things in life, including the stock market, but one of the most difficult things and nearly impossible to achieve. So remember, time in the market beats timing the market. Yeah, Adam, whatever. Otherwise, guys, that is the end of my video. Thank you very much for watching. Let me know in the comments below if you're investing in VUG or looking into getting into the ETF. Otherwise, guys, hit that subscribe button, like button, and I will see you guys in the next video.